A very good morning to all watching this video. This video will take you through the procedure for conducting EBIT EPS analysis. Before we could understand the procedure of conducting EBIT EPS analysis, let us understand what is EBIT and EPS analysis. We know that a firm can finance its investments from various sources such as borrowed capital or equity capital. The proportion of various sources may also be different, and various plans, financial plans would also be different. In every financial plan, the firm's objective is to maximize its earnings per share. EBIT EPS analysis is a tool used for making the choice of the combination of the various sources of funds. It helps the company select the alternative that yields the highest EPS. EBIT EPS examines the effect of financial leverage on the behavior of EPS under different financial alternatives and with varying levels of EBIT. Now let us analyze the steps in conducting EBIT EPS analysis. Step 1. Identify the capital structure pattern. In this step, we would be finding out the number of capital structure plans the company has decided. A company can mobilize capital in different forms. It could be a combination of any of the following. It could be equity shares only, equity and preference shares, equity and debentures only, equity, preference shares and debentures. So the first step is you need to identify what are the different financial plans that the company has at its option for making a choice. The second step is you need to calculate the earnings per share. The formula to calculate earnings per share is profit available to equity shareholders or earnings available to equity shareholders divided by number of equity shares. So by this we understand that we need to first calculate the profit or earnings available to the equity shareholders, and second we need to calculate the number of equity shares. Now let us see how do we calculate the amount available to equity shareholders or profits available to the equity shareholders, and then we will see how do we calculate the number of shares. So to calculate the amount available to equity shares or profit available to equity shareholders, you need to make the profitability statement or the statement of profit, for which EBIT is a must. The EBIT would be given in the problem. So the relevant information to prepare the statement would be given in the problem. So the format to calculate the amount available to equity shareholders is first EBIT should be taken. So EBIT in the problem would be given for one plan, or the EBIT could be changing. So it could be different plans or it could be one level of EBIT. So you may have to calculate at a given level of activity the impact of financial plans on EPS, or a single financial plan, and at varying levels of EBIT we may have to find out what is the impact on EPS. So whatever it is, you have to first take the EBIT. From EBIT first we need to minus the interest, that is I. The difference between EBIT and minus interest would be your earnings before tax or profit before tax. So now we have to remove this tax. So if the problem has a mention of tax, then we have to remove the tax. So we have to minus tax. So once you minus tax from EBT or PBT, you get EAT or PAT, that's earnings after tax or profit after tax. If at all in the problem has a reference of preference dividend, preference share capital. So preference shareholders are eligible for payment of dividend before the equity shareholders. So as such, we have to minus the preference dividend here, because they have a preferential right over the payment of dividend as well as the capital. So once we minus the preference dividend, The remaining balance is going to be the amount available to the equity shareholders. So now we have seen how do we calculate PAESH, that is profit or earnings available to equity shareholders. Now we need to calculate the denominator, that is number of equity shares. Sometimes the number of equity shares would be given if it is a single plan. If there are two or more plans, because as I told you, the company has an option of getting borrowing capital in any of the forms, which I have discussed in the previous slide. So when the company is going for different additional capitals, forms of capital, then there could be a new equity shares. So at that time, we need to calculate, how do we calculate the equity shares? Number of equity shares equal to equity capital divided by the price per share. You get the number of equity shares. So as you have got amount available to equity shareholders or profit available to equity shareholders and the number of equity shares, now you can substitute these values in the formula. EPS is equal to PAESH or EAESH divided by number of equity shares. So you get the EPS. So this is, here we come to the end of second step. Now coming to the third step, we need to evaluate the plans, different plans at a given level of EBIT, or we have to analyze the different level of plans at a varying levels of EBIT. Now we have to come to a conclusion or comment on the plans. So the criteria to choose a project, to choose a capital structure plan is going to be the EPS. That's why we call EBIT EPS. So the plan that yields a higher EPS has to be chosen. This we come to the end of the video. In the next video, we will be conducting EBIT EPS analysis, taking some illustration problems. Wait for the video. Thank you.